Hello everybody. In today's video, we're going to discuss technical analysis of stocks. As usual, we're using Python and a Jupyter notebook to do all of our analysis. So this, if you've seen some of my other videos, this view should be very familiar by now. Technical analysis of equities and stocks are basically what we're trying to achieve here is looking at trends, patterns, historical price movements, and try to make predictions into the future with what's going to happen with the stock prices. Is it going to go up or down, or maybe sideways too, right? We try to do the analysis and get some insight into what's going to happen next. We have perfect visibility into the past, but we have very low visibility into the future, or none, right? So we try to create that and build some confidence around that too. So we're going to look at a few things today: support and resistance levels, moving averages, relative strength indices, moving average converging or diverging, right, coming together or spreading apart. We're going to look at some stochastic oscillators and overall trends and patterns in this data, and a few other things too. So we're going to import some libraries here that's going to help us to pull data from API endpoint maintained by Yahoo Finance. This is a library here, probably one of the most important ones in this list of libraries here. So Yahoo gets its stock prices from CapIQ, and CapIQ gets all the closing prices when the market closes a little bit after 4 p.m. I'm not exactly sure how they do that. I used to work there, but not in that department, but I would assume they have some big data collectors that run probably around 5:30 p.m. after all the closing prices are in, and anything that needs to be reconciled is changed and updated, and whatever adjustments need to be made there. But then they'll run the process, collect it, and add that to their database. And there's probably I don't know exactly, probably 50,000 equities that are covered by Yahoo Finance. So it's pretty comprehensive, right? So what we're going to do here is go back in time 12 months. This is somewhat arbitrary. Usually I go between 6 and 12. 6 is good. It gives you some history. 12 is obviously a little bit more. It's double. Do you need to go back years and years? I don't think so. I don't think it's relevant what happens several years ago. Things in the economy change quickly. Politics change. Oil prices fluctuate, and that has an impact on stock prices. But really, what's happening several years ago really doesn't have that much of an impact on what's happening right now. I'm really more concerned about things that are in the recent past, not the distant past. So in this case, we're going back 12 months, but that can be some arbitrary. You can go back more or less, right? It's really up to you. So I'm going to go ahead and import data for one single ticker here. This is Apple. Here's the ticker symbol, AAPL. Okay, and we'll get today's date minus 12 months back in time. Okay, so we're in the job right there, and we have as of actually today, 221.36. That's probably the current price right now. Let me take a look here. Okay, Apple, where are you? AAPL. Yep, right there. 221.38. Okay. So yeah, so this is actually updated in real time as of today. So this is going to be a real time number, and all of this is end of day when the market closed yesterday. Okay, so we're good with that. We are now going to calculate some moving averages. We have a window of 7 days. Remember, this is end of day data. We're going to take the average, that's the mean. And here's a 21-day moving average. Here we have exponential weighted moving average. Okay, so slightly different metric, but doing somewhat of the same thing, just adding exponential weights to the moving averages rather than just taking the straight average over here. And then we're going to get the Bollinger Bands. So these are two standard deviations from the 20-day standard deviation. So again, we have the rolling, instead of mean, we have standard deviation, a window of 20 days. So it's a rolling average. And we're going to get this 20-day standard deviation and take two standard deviations from that. Okay, so we just created a bunch of new features. This is called feature engineering. We started with the adjusted close. We created 1, 2, 3, 4, 5, 6, 7, 8, 9, 10 new features to help us with the analytics of this Apple stock. Okay, and it's useful for several reasons: to help us predict the price, also to create some interesting plots and charts that are going to help us understand the historical price movement of this Apple stock. Okay, so um, here we're going to create some trade signals. I'm going to hit enter, run the cell to do the update here. So this is one trading strategy that I want to introduce you to. And let me pause for just a moment. Say this is not investment advice. Not saying this is what you need to do to make millions of dollars in the stock market. This is one idea. You can try it at your risk. If you lose money, don't blame me. Don't get angry. Don't try to sue me. None of that is going to happen. It's not investment advice. It's just how we can use Python to create investment strategies, try to find potential stocks that are good investments, try to generate capital gains here, testing some ideas for trading signals. Should we buy? Should we sell? What do we do next? So this is not investment advice, but it certainly is more insightful and more, we're generating knowledge here, gaining knowledge and generating ideas on how to make strategic investment decisions. Okay, and that's what this is. There's no guarantee of anything, but we're getting a lot more insight from this analysis than you would have if you just took a dart and threw it on a dartboard with a list of equity symbols, right? So here's a buy signal, sell signal. We're looking at the moving averages. If it's greater than the 21-day moving average, this looks like a positive. In position looks false. We're saying this is a buy signal. If it's not true, it's a sell signal. Okay, so that is a strategy. If the moving average 7 days back is less than the 21-day moving average, if this is true, this is a sell signal. Oh, I'm sorry, this is a buy signal. Otherwise, it's a sell signal. That's what we're generating right here. So let me hit enter to run it. And okay, let me change a couple things over here. This is the AAPL. I like these displays a little bit better, and display tail. By default, you get the top 5. Oh wait, sorry about that. You get the top 5. What's going on here? Display.head. Oh, I know, yeah, print is different. Okay, disregard that. Print. Hmm? Oh, what is that? Okay, yeah, I haven't done this in a while. Okay, I don't edit any of these videos. I just do it in real time, straight through. Print head and head. Oh, there we go. All right, so there's the head and print the tail. Let me go back and print the tail too. I was looking for some type of buy sell recommendation here. Yeah, I don't edit any of these videos. I just do it in real time and just go straight through, and what you get is what you get. Okay, so it's actually no buy or sell signals in this case. The moving averages just did not move enough in this case, and that's fine. For different securities, it's going to be different. You'll get different results, and if you change these time periods, of course, it's going to be you'll be getting slightly different results too. So some of these things are somewhat arbitrary on how you set up the trade signal. What do you think is going to work? What do you think is important? What do you think is not important? I mean, there's a lot of intuition, there's a lot of knowledge and insight that goes into this, but some of this is kind of a guessing game. And how do you feel? How confident are you? How skeptical are you in some cases, right? And this is not an exact science. Otherwise, everyone would be multi-billionaires. You have to use some intuition, some market knowledge, some experience. So there's a lot that goes into it. In this case, these trading strategies didn't work, and that's fine. Okay, that's fine. We'll just move on and try something else. We're going to plot buy and sell points now. So looking at a slightly different strategy, a moving average of 7 days and 21 days like before, but now we're going to plot out the results with red indicating the sell and green indicating the buy, and at what point would be the optimal buy and the buy and sell points. Okay, that's what this is. So again, we're looking at moving averages. The stock price is the light blue line. The MA7 is the green, and then the moving average 21 is the orange, right? And the more days of moving average, the more lag there is, and then of course the smoother the line is too. So the daily price is going to be pretty jagged and fluctuating a lot. 21-day moving average is going to be not moving a whole lot because there's a 21-day lag behind that, right? So mean regression strategy. So here's another investment strategy. Let's test this idea and see if this works. We're looking at adjusted closing prices and looking at a mean of 20 days, so moving average of 20 days, and we're trying to determine if the daily data is greater than or less than the adjusted close, right? Shifting back 1 day. Okay, so here's a slightly different approach to creating a trading strategy. And once we find something that seems to work consistently and persistently, then we're going to go with that. Sometimes you have to test a bunch of ideas because you don't know what's going to work. And what works now might work for you for 6 months or maybe just 3 months, and then it stops working, right? If you find a pattern in the stock market data, that's great. You can exploit it, but that's not going to persist forever. That's going to change over time, right? So you do have to test a bunch of ideas. Be strategic, but be innovative too. Try to come up with new ideas and see what works at what point in time. And I guarantee eventually what works for you today will not work anymore. But if you could leverage that for 6 months, maybe 9, maybe even 12 months, congratulations on that. But yeah, you will have to come up with new trading ideas and trading strategies over time. So let's run this and see what the outcome is. Control Enter to run the job. Okay, we should have results. We have moving average of 20 days, daily returns, right? The first one's going to be nothing because there's nothing to compare it to. The second is going to have some type of return. And we see some swings, some up and down with the 20-day moving average in the second column. Okay, and over here we have, again, the MA20 is a lag of 20 days, so it's always going to be smoother than the daily closing price plotted here, okay? But here the strategy returns exceeded the daily returns, okay? So this strategy is paying off. The first one really did nothing for us. The second one is paying off. The buy and hold return is 21.5%. If we trade on this stock in and out over time and do multiple trades, multiple buys and sells, we actually generate a slightly higher return, 35.6%. So, so this strategy is going to take more work. It's definitely more difficult than a buy and hold, but there's a payoff too. One thing to consider, I'll mention it, you're going to have to pay taxes every time you buy and sell and have capital gains, but you can offset those taxes with capital losses. So if you sell at a loss, that will offset some of your gains, right? So you will have more trades to report, and that's more work at the end of the tax year. But again, like if you can generate, in this case, it looks like maybe 14% higher return for a little extra effort. It's probably worth it. We're coming up with a different trading strategy. This is a moving average crossover, okay? And for this, we're looking again at the adjusted close price being greater than or not greater than. This is all created in one statement here. The moving average, 20-day moving average, right? So that's what we're looking for. If the closing price is greater than the moving average, it looks like the stock is on a breakout pattern and it's trending up over time, right? It's exceeding the moving average. If it's doing the opposite, it's going down, right? So let us run this strategy, see what the payoff is. And this is quite profitable, right? So the buy and hold strategy is 21.5% return. In the past 12 months, remember at the beginning of this, I said we went back 12 months. The strategy to trade in and out of the stock as you cross over this moving average threshold generates almost 5 times more returns. So you have 100% return because basically you're eliminating all your losses at this point. You're only keeping the gains and wiping out the losses. But I'll tell you from experience, this takes a lot of focus. You're always watching the market. You always have an eye on things. You always have your finger on the pulse of what's going on, and you're glued to that screen all the time because you have to see if the stock price during the day is crossing that moving average price. You have to trade out of it immediately, right? And if it's on the downside, right, and if it's going up on the upside, then buy in. But if you have that kind of not commitment, if you have that kind of discipline, you can create a very nice return. In this case, almost 100%. So that's phenomenal, right? Let's plot the results of what we've been doing in a matplotlib plot. I like these matplotlibs. They're pretty scalable, pretty flexible. You can plot almost any kind of imaginable plot. It's really kind of mind-blowing the things that you can do with this. So let's take a look at this. So this goes back. Now this was a little bit different because we're looking at some percentage changes in this plot, and we're looking for a couple different things. Trailing prices. Let me look at this. I haven't really looked closely at this in a while. Rolling 252 day. Okay, so it's kind of like a different view, and we're going back in time further now. This is 2020, January 2020, right? So this is not the data from the first plot where you go back 12 months in time. This is the same ticker, still Apple, right? It's right here, but we're going back longer in time and doing a more deeper dive and picking up more data points for the stock. So you can see the changes over time, of course, the benchmarks that we've set, and the moving average tail ratio. So this is kind of a different strategy, right? If you're looking at the tail ratio, you really have to collect more data and go back further in time, or you won't have any tail at all, and you can't even plot this, right? So it's more of a historical change over time. The other trading strategies were more short-term. This is more long-term. So again, just a different approach. Now let's switch gears a little bit. Instead of just looking at one stock, we're going to look at all the components of the Dow 30. We have 30 tickers listed here. Similar to before, we're loading a list of libraries right here. Going back 12 months in time relative to today, we're looking at the current date minus 12. That's going to be our start and end date. I'm going to pull in data right now. Okay, run this guy. It's going to go fetch all this data for 30 stocks going back 12 months for all the components of the Dow. Okay, you see that listed here. And let me see. Okay, just a quick sanity check. Looks like the data is good and all the dates are good. We're getting as of today, so real-time pricing right here, and then all the historical going back 12 months. So excellent. Now we're going to look and see if today's price is I have notes here. If the price, say, is lower or higher than 12 months ago, that's all this does. So let's run this to refresh it. Is the price lower or higher? Did we make a profit in less 12 months? And we have just a binary true or false. So it's like 50-50. Some are up, some are down. Pretty much across the board. It's like almost half and half, right? Ups and downs. So now let's look at the cumulative returns for the same time period, 12 months back. Cumulative returns. And we're looking at some plots too. Okay, so here's the returns out. Apple, again, 24%. If you use that trading strategy I showed you before, that's 99%, so significantly more. Bank of America, negative. I see a few negatives. This is pretty big. Negative 42%. Couple others. WBA, negative 61%. Not good. And WMT, I think that's Walmart, so 29% up. Okay, and then you can see the support and resistance levels for each one of these stocks. So you see the stock price is a solid line, and the dotted lines are the support levels. Typically, once the stock continues on an upward trend pattern, it reaches a certain support, and it doesn't go through that support. Now, it certainly can, but in these cases, we're trying to find that support. And then the resistance is the highest watermark, right? So the high watermark is where the stock topped out at, and it hasn't gone past that. So it's a resistance level. The stock is resistant to moving up over that level. And then the support level, again, is typically the lowest point. The lowest point that we see here before the stock is trending up again. Okay, and we see that pattern repeating over and over. Okay, so again, not trading strategy, but just good insight into the historical movements of these prices over time. So this is another trading strategy. This is generating buy or sell signals, looking at thresholds for the price data, support level, and the resistance level. So if the price data um, is less than 1 plus the threshold times the support, this becomes a buy signal, okay? And if the price data is greater than 1 minus the threshold times the resistance, and there's a couple criteria that have to be true, okay? So this has to be true. This has to be true. Let me get the mouse over there. And this has to be true. If both are true, this is a sell signal, and we have sort of the mirror image logic on the top, that would be a buy signal. So let me run this and see which these stocks are buys and sells. Okay, so you have your list of buys, list of sells right there. You can go ahead and test the logic and see what you get. Again, there's no guarantee that this is going to work, but based on the logic that we've put up, just overall knowledge of stock market experience, like these seem like some plausible trading strategies right here. This is a relative strength index. This shows you how strong the stock is moving up and down over time. And we are going to plot each of these again. So we have a relative index of strength. You have the price, stock price, the historical stock price, and then, sorry, let me move this down a little bit so we can see more. And then the move up and the move down probability. Okay, so these move up and move downs are probabilities. And again, we see this, the support and resistance levels for each stock. Okay, nice. So that works pretty well. Okay, here's a momentum oscillator. This shows the momentum of each of these 30 Dow components and the swing over time. We have two things that we're plotting. The momentum oscillator on the second axis on the Y side, that's in blue, and then yes, over time is the date, right? That's pretty standard, and then of course the stock price over time too. So now you're looking at stock price and the momentum of the stock, right? So something that's very volatile and choppy is going to have low momentum. Something that's pretty flat and pretty sideways is just not going to have a low momentum. Okay, so we're looking at basically like volatility changes over here. Relative strength index, RSI is abbreviated RSI. The relative strength index will show you how strong that security is, and is it potentially overbought or oversold, meaning will it trend upwards or will it trend downwards? Okay, that's what we're trying to understand here. So let me hit Control Enter to run it. We'll get our results. Okay, we have the moving average crossover, similar to what we saw before. Working a lot with moving averages here, because you don't know what's going to happen day to day. Is the stock going to go up or down? Nobody knows, okay? The executives at the enterprise don't know. Stock market analysts don't know. Hedge fund managers don't know. But we can certainly have great visibility, 2020 hindsight into what happened before, and then try to understand what's going to happen next, as long as it's not a major event in the market. Like it could be anything. Oil prices getting slammed, huge corporate debts being exposed. I mean, corporate fraud being exposed. Misrepresented financial statements. Financials have to be restated or something like that. Like there's a lot of things that can happen and take your portfolio off track. But we're not looking at that. We're looking at pretty consistent, pretty persistent changes over time. And these moving averages really do help you to understand that, because there's just too much choppiness, too much activity in the day-to-day price. But the moving average really tells a more meaningful, more impactful story for all these things. Okay, so that's it. That's a lot to digest, I know. Hopefully you learned a thing or two. I think the more knowledge you have, the better investment decisions you can make, the more successful you're going to be. And I think this was just a very good overview of charts, stock indicators, patterns, trends, how to time the stock market, how to build trading strategies, and looking for buy and sell signals, things like that. So this is all technical analysis. This really has almost nothing to do with fundamental analysis. Fundamental analysis is a whole different topic that deals with financial statement analysis, valuations and ratios like ROIs, ROAs, ROEs, price to earnings growth, economic indicators, qualitative factors. So it's not so much quant, it's more the quality of the business, how smooth, persistent, and and um, persistent and um, consistent over time are these stocks going to be. That's a whole different topic. I'm going to do another video on that, but this covers a whole lot in the technical analysis side. So that's pretty much it. Hopefully you guys learned a thing or two. Thanks for your time. Have a great day.